So one of the questions I get all the time is how can I trade gold, and is it actually possible to make consistent returns trading gold? So in this video, I'm not only going to be giving you the entire system which allows me to do this and make consistent returns on gold, but at the end of the video, I'm also going to be giving you guys a hack to get around the common problems of greed and FOMO and some of the other psychological problems people struggle with in trading. And this is a hack which can literally be applied right now to get around that problem almost instantly. And by the way, this system is incredibly simple, so that you can just show up to the charts every single day and follow a logical and step-by-step system, which is going to allow you a lot more time freedom and less time on the charts. So now I'm going to be showing you guys a series of trades, let's just say 1 week's worth of trades, to show you guys how I trade and how this system requires the very little thought process. I very simply see a trade, execute, or don't see a trade, and then go about the rest of my day, and it's as simple as that. So this first trade, I actually was tagged into it whilst I was at a restaurant, and that is how simple the system is, right? You can literally set the limit, wait for it to get tagged in, and then that is all we're literally doing here, right? So going through the strategy from start to finish, the first step in the strategy, if we just get up the trading plan, and by the way guys, this full trading plan PDF document is going to be available completely for free in the description below, which walks you through the full system, which I'm going to go through in this video. One of the most common problems most traders have is that they don't have any written trading plan or clear rule set to follow, which means they just show up to the charts and not really know what they're doing every single time. So this is going to massively help you guys out, and it's completely free in the description below. But step one of the trading plan is very simply, we're just going to identify market structure and direction on the daily and 4 hour. So right here, what we can see is that focusing on just this price action, which is in the frame, right? Price had reacted from this previous demand zone. We then had price rally on the daily time frame, very clearly shift bullish just here. So whereas before price was in this downtrend, printing a series of lower lows and lower highs, once it came into this demand, we very clearly had that shift over to the upside. So price has now flipped bullish, and what I'm thinking is that we are looking for more continuations to the upside, right, in line with that overall trend. What we can also see as well, zooming in closer, is that price has now retraced, tapped into this daily demand zone. So at this point in time, what I'm basically thinking is that this is very likely going to be the higher low, which puts in a new high, which logically means that price is going to gravitate back towards this opposing liquidity at these previous highs, right? Now, if we go over to some of the lower time frames to analyze the structure more clearly, which brings us on to step 2 of the trading plan, which is basically just looking at some of the more refined lower time frame structures and identifying any points of interest, which for myself, which we'll get into in a moment. But first of all, let's have a look at the more refined structure. So what we can see here is that once price came into this daily demand, the hourly time frame flipped back bullish. Once again, leading down into this area, price was in this bearish trend, but once it came into the demand, we very clearly had that shift over to the upside, and then price starts to present some very clean bullish structure and order flow, as you guys can see right here, printing a series of higher highs and higher lows. So bringing us on to step 2 of the trading plan, we're going to identify a point of interest from which we're going to look to buy. And very simply, all this is we're going to look at the current trend leg between the low and the high, or if you're in a downtrend, it would be between the high and the low, and we're going to look for any areas of imbalanced demand in this region. So in this case, what we can see is that we have this area of imbalanced demand. You could of course refine it to this single candle, but for me personally, the area of demand is classed as the whole region that initiated the volume. So in this case, you can see we had this consolidation, and then after that consolidation, we had all of this volume coming into the market. So this area right here, this whole area, is the demand for myself. And then likewise, if you're looking at a supply zone, it would be the whole area which caused the volume. So this area right here, for example, would be a clear level of previous supply from which I would have been looking to sell. Now, you can also see in the trading plan, we have a fourth criteria for these levels to be valid, which is that there must be an area of liquidity above the demand or below the supply. Because we're looking at buys in this case, what we want to see is some previous liquidity created above the demand. In this case, right, you can see this area, which was very clearly an area where people were previously buying from. And what has basically caused me to see this as an area of liquidity that price is likely to take out before it continues to the upside is the fact that you had this big bullish move up and then price kind of slows down and very simply just kind of consolidates in this one area. And then as you guys can see, eventually price does make its way down back towards that point of interest which we had previously identified, right? So all I'm simply looking for after price comes into this demand zone, which leads us on to step 3 in the trading plan, is that once price has tapped into this area, we're using the lower time frames to execute and set a limit on another area. So let me just explain this more clearly. So first of all, a little bit of theory before we get into the actual entry. So basically, if price is overall in a bullish trend on the higher time frame, let's imagine this is the higher time frame, right? When it's retracing down into a point of interest, let's say, for example, we have this area being a point of interest. When price is retracing back down into this area, on the lower time frames, this is going to look like a downtrend, right? Because price is retracing. So in order to execute a trade, what we want to see is basically for this lower time frame to realign with the higher time frame by flipping back bullish in this case, right? So all we want to do is wait for price to break above and create a higher high. So this is going to be our change of character. So all the change of character is, by the way, is just simply a break of structure in the opposite direction to the trend. So in a downtrend, if price creates a higher high, that is a change of character. In an uptrend, on the lower time frames, if price creates a lower low, that is a change of character. But all we're simply waiting for is for this shift to happen in order for us to get an entry. So here, and by the way, specifically what I'm doing is using the M5 time frame every single time. This is going to kind of take out any of the confusion in regards to the entries, using the same time frame over and over again. And like I said, I'm only ever using the M5 for the entry time frame. So right here, you can see once price comes into this demand, whereas before it was in this very clear downtrend, once it comes into the demand, it regrabs the low. This is our lower low, and then price eventually shifts over to the upside, creating a higher high right here. After price creates a higher high, what I'm basically looking out for is an area of imbalanced demand for us to enter from. In this case, we don't get one initially, but after price pushes up some more, we do get the creation of this new zone right here. So after that, what I'm simply looking to do is execute my trade on this area. Stops just below it. In this case, I would have my stops just below this wick because price could maybe come back down and sweep this, but still go in our intended direction. So what we always want to do is make sure that the stop loss is in a place which actually invalidates the trade, rather than, for example, trying to get a crazy risk reward and having it just below the demand, because that very often is just going to lead to unnecessary losses, which for most people is not going to be good psychologically, because they're not going to be able to handle having that low win rate. Now, step 4 of the trading plan is actually something that, like I said at the beginning of the video, is a complete hack for getting around the problems of any uncertainty, greed, or FOMO when you're trading. And this is going to very simply be mechanically targeting a 1-to-3 risk to reward ratio. Now, what this is going to allow you to do is, number one, it's going to take out any of the uncertainty and discretion in your trading, because you know exactly on every single trade when and where you are going to be targeting. Now, one thing I've found as well is, based on my data, 1-to-3 is the optimal risk to reward to use using this strategy. And I've collected, several years worth of live data and back-tested data on this to prove it as well. So going for a 1-to-3 risk to reward is a massive game changer, and that is step 4 of the trading plan. I also do not take any partials, and I do not make the trades break even. Again, this is based on the optimal set of criteria, which I have back-tested endlessly throughout the past 5 years that I've been trading now. So As you guys can see in this case, price does eventually tag us in and then eventually moves on over to the upside, and it's as simple as that. Like I said, once you see price come into your zone, you look for an entry. If the entry is there, you set the limit, mechanically target it 1 to 3, and simply set and forget the trade, allowing it to play out. You don't need to manage the trade, you don't need to make break even, take partials or any of that. And the beauty of this strategy as well is that when we were waiting for price to come into this demand zone, right, we could have literally just set an alert here, meaning that we didn't need to look at the charts at all until that alert went off, which means that this strategy works even if you do have a full 9-to-5 job or university or whatever the case may be. You can use this strategy no matter the case because it involves very little chart time. So following on from that trade, what I would be then looking for is very simply just to follow this bullish structure, once again looking for more continuation opportunities after price forms a new point of interest. And in this case, as you guys can see, price develops some more, and now we have a new range to look at between the low and the high. And once again, we're very simply identifying any areas of imbalanced demand in this range between the low and the high from which we could look to buy from. In this case, we have this one, and we also have this one. And again, the one that we actually trade off is going to depend on how price reacts to it on the lower time frames. So in this case, you can see once price comes down into that first zone, like so, we then go over to the M5 time frame and we're looking for the exact same entry confirmation once again. So in this case, you can see M5 structure is currently bearish, so we're waiting for price here to form a higher high before entering the trade. So what I would be waiting for here right now would be for price to break above this current high, which is the current lower high in the downtrend, right? Once that happens, we are then confident that price wants to head over to the upside because it has flipped bullish. So here we can see price did flip back bullish. We then have an area of imbalanced demand just here, as you guys can see. So what I'm simply doing again is entering on this area, having my stop loss in a place which actually invalidates the trade, which in this case would be just below these lows. If price goes any lower than that, I don't want to be in this trade anymore. And then again, mechanically target a 1 to 3 risk to reward, and it is as simple as that. We can now just set the limit on this zone and wait for it to play out. So as you guys can see, eventually this trade does tag us in. We get that entry, and then price makes its move over to the upside. And again, now that price has broken that main high, you can see another trade has started to form. So we've had this second break of structure. Price has formed a new area of demand in the range. So all we would be doing here, once again, is waiting for price to retrace into the demand, going over to the M5 time frame, waiting for that structure shift, and then setting a limit, mechanically targeting a 1 to 3. And as I said before, it is really as simple as that. Doesn't require much thought process. It is literally as mechanical as it can be for a price action strategy, and that is the main benefit of using this full system. Now, before we end the video, there is one other important point that we have to mention here, which is of course the issue of risk management. Now, for anybody using a live account, this is going to apply to you. For anybody using a prop firm account, I'm not going to go through the full plan here just because it is quite long, and obviously depends on how many prop firm accounts you have, and of course also whether they're live accounts or challenge accounts. But as I said, this training plan will be available for free in the description below. You guys can read through this in your own time if you wish. And I also go through at the end of the training plan some of the key processes which are crucial for both tracking data and improving over time, improving your results over time via trade journaling, and also something called ASR, which is like a weekly, monthly and quarterly performance review where you go back through and review your performance, how you performed in terms of the technicals and both psychology. This is a massive game changer as well if you haven't tried it out, and I walk you through the full process in this training plan, which will be in the description below. But for right now, the only thing I want you guys to focus on is the fact that what I'm doing every single trade is doing a 1% risk on every single position, right? So this means that if the trade hits my stop loss, I would lose 1%. If the trades hits our take profit, which is a 1 to 3 mechanical risk to reward, we would gain 3%. And obviously with this sort of system, you only need around a 30% risk to reward in order to make any profit. So you don't need a high win rate at all, even if you, so you don't need a high win rate at all to use the system. Obviously it's beneficial if you have a higher win rate, and that's something you can work on. But the point is, you can literally lose 7 out of 10 trades with this system and still make money. That is why I said it's a very simple and easy system to adhere to. Now, like I mentioned prior to this, we don't make break even and I don't take partials. And once again, this is based on several years worth of data and what I have found to be the optimal approach based on those statistics as well. So this isn't just some like made up number, it has data behind it and is backed by data. And guys, it's really as simple as that. So every single morning I come to the charts, I'll set my alerts, wait for price to come into my areas. If an entry confirmation presents, I'll enter the trade. If not, I just go about the rest of my day. And it's really as simple and efficient as that. I don't need to spend any long hours staring at the charts. It's just a simple and efficient process. Now, obviously this was a quick rundown of the strategy. So if you want me to break it down in more detail and go through an hour's worth of trades, then I would recommend watching this video next, where I go through around an hour of backtesting of this system and go through numerous more trade examples.